So with that in mind, let me start by introducing our new background. So it was hot as hell here in Bulgaria. I know in Spain, well, Western Europe, it's like an absolute nightmare. I read somewhere that Paris had totally like banned alcohol at one point because people were getting drunk and getting hospitalized because of some heat strokes and all that uh, amazing stuff that comes with 47 degrees Celsius. So with that in mind, the background usually has a little cozy fireplace. I don't think it's appropriate. So, welcome to the beach. Apparently, that's where we're headed, or where we should be headed at least. Uh, anyway, as always, Q2 review for 2026. This is not financial advice. Don't take anything that I say as such. Do consult with a professional if you want to make any of these moves. Happy to discuss any of these, but they are all given in the context of what I've done in the past, what I'm currently doing right now, and what I will be doing in the near future. And on that topic, I essentially divided this up into three different sections. They are all connected to the engines that I run through the Hermit Ventures. By the way, I mentioned nothing, but feel free to post your questions. I will go over them at the end of the session. But yeah, anyway, going to the point. Engine number two. I know why not start with engine number one. Well, I know a lot of you are more interested in engine number two, which is the public sphere of things. So, I just wanted to sort of get that over with as quickly as possible for you guys. I want this not to be a time waster at all. So many of you may not be interested in the private side of things. I do think that the private side of things is way more interesting, but just for time's sake, here is the public end of things. So let's start with former holdings, all regarding oil and oil dependencies. So we used to hold all of these companies: Saturno, Yangara, Constellation, and obviously the magnificent TGS. Constellation was a minor position, 2 or 3%, but TGS ended up being like 15% of the portfolio. I still think it's a ridiculous company. Given the price we paid for it, it would be the equivalent right now, like a 10% dividend yield and something like 110, 120% return. I haven't checked the price in like the last week, but you know, more or less. With that in mind, and with regards to the oil and gas holdings, I do think that we're at one of those times where you well, we obviously salt, but you probably should, in the sense that the oil cycle has essentially two pieces. One is the price of oil, and the other one is the capex, the spending on new projects. They're usually connected. One follows the other. So as prices rise, there's more people spending money in terms of oil and gas, and obviously energy companies. But because of the oil price and oil sanctions and all that good stuff, I do think that we're in a bit of a turmoil right now. A lot of the assumptions for a lot of people changed. These companies do hedge, 6 to 8 months in advance. So whatever happened 6 months ago, that is part of the pricing for their assets right now. And so they will benefit and they will still benefit from the increases in oil prices. But I do see a lot of decay in terms of energy demand. Excuse me, not energy demand. Obviously, energy demand with AI is kind of crazy, but definitely energy supply, particularly energy supply coming from here. There's a lot of changing narratives when it comes to stuff like nuclear. Germany coming back into the whole. Let's not depend on Russian gas for everything else. And there's a bunch of new projects coming out of Canada that will enable supply of gas to essentially Southeast Asia, because they're off of the west coast, that will unlock, in this case, gas, but also a lot of the exports for oil. All of these generate lower prices, and I don't really see the capex cycle going that far. For that reason, and because I honestly don't think any of these companies are very good, other than TGS, I would personally not hold onto these. TGS, though, is the only exception, and it is quite a big exemption in terms of not only how I would hold it, but also the fact that I would also hold it forever. So on the how I would hold it, how I would keep on investing is waiting for these cycles to go back up and down. I mean, it is one of those companies that it's probably the best managed company I've seen, or at least the one with the best discipline for capital allocation. It's even better than companies like Constellation Software or serial acquirers that are supposed to be extremely good capital allocation. These guys just pair contracts, the revenues, the cost matching of these contracts with the capital movements of, in this case, or in the most recent case, buybacks. It is just ridiculous. Anything that management does is just really, really good. And obviously, dividends and buybacks were very, very beneficial for us. But it is one of those companies that you need to time when it comes to getting in and out. It is, though, of outstanding quality. It's just that you might go crazy by holding it. Because I would expect overall volatility of TGS to be kind of crazy from now until the end of time. It's just part of how this business works because it depends on the second, cycle, not the prices, but rather the capex, the spending on new infrastructure. As for, by the way, feel free to ask any questions. I will go over them again at the end of this chat. But if I can interrupt what I'm doing to answer something very specific or about what I'm discussing, I'll happily do that. Anyway, that is with regards to oil and gas. Again, it's one of the areas where I'm specialized. I've been doing it for more than 10 years, but I do see a lot of fragility at the moment for them, particularly on the distribution and even more so with junior miners like Saturn Oil or Yanka. Anyway, the holdings overview, the known holdings. Now that we're transitioning from, the hedge fund that we used to manage into an operating holdco where we're both purchasing entire businesses and keep on, investing in these listed or public businesses. We are going to look at even more concentrated bets just because of the distribution. As a whole, it will be very similar, but I'll just separate both of these portfolios. And for those, I want to keep on, running with some of the old names. Aurora had some very relevant news that we summed up a week ago, I think. Yeah, last Friday. I would go ahead and read all about that. I still think it's a magnificent company. They have a really, really easy catalyst, which is in the form of exit via, or essentially being acquired. Gaining notoriety would be the short-term catalyst, and the medium term would be getting acquired by one of the large guys. It's just an unexplored space. The players are very small, so they don't really have competition. And I really like management. They are really good people, and they're very competent at what they're doing. Particularly, I think Matt is ridiculously good at what he does. He would be the marketing, the chief sales guy. And even though he's not newcomer to the industry, but definitely a new hire by Aurora, relatively new hire, he's been doing really great work at exactly the right time, exactly the right topic, right time, right place for Aurora. AEP is another cyclical company, just like the oil guys. It's just that it operates on a different time scale. So I think these guys go through a cycle every 10 years, oil and gas, because of the amount of information that is out there. I think the cycles are much shorter. You can have a massive spike and a massive downturn in seconds. We saw this with the Iran thing. We saw this with COVID, obviously. I don't think it's that spiky, that volatile with house construction, but housing materials, sourcing of those materials, the logistics end of things, those are obviously cyclical. And I think AEP is just positioned right place, right time. Management, again, super competent, and hopefully will be there for the long term with them. They got some help from the government, who, obviously the ultimate interest should come from high above. People that are looking at the macro problems should count with companies like AEP to essentially source all of the materials that they need to increase the supply of houses, which seems to be a massive problem all around the world. Canada in particular, but you can see it everywhere in Western Europe with prices of houses just skyrocketing everywhere other than Texas for some reason. Yeah, Texas, I think Texas, Oregon, and Florida were a little bit easier on the. I'm not saying that every single spot isn't having the prices, go down or anything like that. What I am saying is the overall prices and licensing, permitting, all that good stuff. In some places is very beneficial, in other places not so much, and these states would be part of it. I don't want to talk a lot about Calnano, but Calnano is our last guy here where we've covered them extensively for a very long time. We're obviously in permanent conversations with all of these guys. But Calnano is one of those things that has been stalling for a very long time. They should probably be, you know, at about 4 times the revenue that they currently have. But they've gone through essentially different military priorities, which force contractors to stall their subcontractors, and Calnano is one of those subcontractors. The recent re-specialization into the nuclear end of things is positive because again, you want cash flow, but the major contracts, the aerospace and the just aerospace is very dependent as a whole on government contracts, and so when priorities shift there, you get multi tens and hundreds of millions flowing from one way to the other. I do think it's a magnificent company, and if you look regularly at the people holding it, I am a big admirer of Roger Dent, and I think everything he touches turns into gold. So I would definitely be looking out for these guys. You do need short-term catalysts for any microcap, in my opinion. I don't currently see any for Cardano, sadly, but I wish I did. It is though one of the guys that will remain on my list for a very long time. Hopefully, because I think people are both. Well, you wanna be surrounded by good people and by competent people, and I think Cardano has both. Um, and they have the bonus that the people involved are also young. So on top of good people and competent people, you have a long runway, which you know what better than that? I think that's the most optimal scenario for one of these companies. Um, and moving on to the other stuff, the stuff that we should see on different posts from now until the end of 2026. I am looking at a lot of companies. I think I've probably screened about two, 2 to 3 thousand companies this year, to date, and there's probably another 1,000 to go or catch up on. Uh, Most of these usually take like 5 minutes. You're screening them, but some of these, well, they take months. And CMG is the perfect example of that. We're set to release a major write-up on CMG. CMG is Computer Modeling Group, Canadian software developer who has been essentially partnering with all the super majors, all the oil and gas companies. Again, oil and gas, ooh, big coincidence. All the super majors to develop niche software that solves certain issues, around the extraction, reservoir calculation, like reserve increases and all that good stuff, the capex that you need. Um, and they have niche software. They've acquired, I think, 4 companies in the past 33 months, so past almost 3 years, and that has created sort of a value chain gap filling for these guys, which I think is really powerful. You'll read all about it in the write up, but the major idea with CMG is simply that they've turned, 4 years ago, they had a change in management, a change in CEO and CFO as well, all the management teams essentially. And they've been running this since I think 78. But with the new management, what happened is that, the new management took a direction of both having this great software, which has like 40% EBIT margins, and then taking the cash that generates deploying it further to increase compounding. Because even though they have 40% margins, organic growth is kind of hard in this sector. Um, but yeah, once you are hired by one of these people, recurring revenue is very, very common. Because once you calculate the initial projections, if the drilling goes through, if everything pans out, well, you have the extraction, and you need to keep on iterating uh, these scenarios through a model which is way, way, way cheaper than doing it without the model, just guessing. Yeah, they I think only have one major competitor, but again, you'll read all about it. The write up is ready. I'm just trying to time it so that it makes sense with me buying, well, essentially purchasing a lot of their shares, and having certain catalysts in place so that the timing of that and the next 12 to 18 months sort of match. It might take us a couple months. It might be tomorrow. Who knows? It depends on whether the catalysts are there and ready to go. Again, you'll read all about this, and I don't know. I should probably release it by Saturday, but maybe next week. Company number two, and I'm gonna go vertically. Blackline. We wrote a Blackline a few weeks ago. It's one of those companies they're also transitioning. A lot of these, by the way, have an underlying SaaS-pocalypse theme going on, because anything that's SaaS right now is being quote unquote taken over by AI. So these companies that, even though they have been doing whatever work they've been doing for 10, 20, CMG, what, like 40 years, 50 years, oh, they totally don't know what they're doing and they can't use AI. So the narrative is some AI thing is going to come and replace them, even though they are probably the best users of AI, and that seems to be the case again for Blackline. The people who should be shivering are the big four, the Accentures of the world. Those are the guys who should be peeing their pants, because they've overly, in my opinion at least, overly relied on human hours, on doing consulting work, doing auditing work, doing uh, all of that back end paperwork heavy work related to the analysis and the supervision of accounts and of clients, and essentially all the back end has been done by people, but people versus a machine that's way more efficient just don't match in terms of cost. So machine can probably do the work of like 100 really good professionals, and with AI, what you have is that those digital professionals suddenly become really, really good at their job. So the substitution on that end, I think, is just imminent. However, there's players like Blackline who have suffered from, depressed numbers. Sure, the CEO is leaving, and there's a little bit of shifts when it comes to management and priorities. But that doesn't mean that they're going to zero. In fact, again, they're posed to be incredibly good. This is a company that has been around for more than a decade doing the digital end. They just have a growing consumer base. They have a bunch of people. I think it was 60, 70 accounts with recurring revenue of more than $1 million. The margins on those are obviously incredible. The economics are very, very, very good. And more importantly, they are good, and they're increasingly good, because as AI comes and becomes even better as a professional, they again have to rely less on human hours. It'll be very specialized human hours, but the supervision is way less costly than actually doing the job. And so these guys are set to essentially uh, take over, eat the big force lunch, and I just think it's ridiculously well positioned. PHI company I can't really disclose a lot on, because again, NDA. You guys haven't know that I've been talking about this company for the better part of what, like the last year and a half, 2 years. There's a write up somewhere there as well. But more importantly, I've mentioned it as something very, very interesting, given the dislocation between publicly available information, them training on the OTC markets, and the reality of how things are panning out. Regardless of oil booms or the contrary, old oil depressions, these guys have a set business with very solid contracts that essentially give them recurring revenues that cover their fixed costs. And yeah, the organ transportation end as well is very good. Again, can't go into details. Just although a really good company, and there's essentially three sets of informations, and not a lot of people have the three sets. And without the three sets, you can't make up your mind. Uh, yeah. Moving on, Monday.com. I don't want to disclose a lot about this. I'll just say there's this stupid pattern. If someone were to like copy, if I had to run something like the Nancy Pelosi index, I would go for companies like Monday. For some reason, TGS, Crocs, and now Monday, they should all be, you know, trading or worth like $200 per share, and they were all at the time of purchase trading at about $70. I think 73 for all three actually, which again, completely unrelated. Uh, these guys. I mean, I have a massive write-up coming for them, but just taking over the share buybacks, they have about 33% of their market cap in cash. Pulling all the right strings, sure, their software isn't the most sticky thing in the world, but again, they've been doing it for the better part of the last decade, since I think 2021 was their IPO. They've been positive, massive free cash flow. Yeah, just part of the SaaS-pocalypse, and everyone being extremely fearful about nothing, to be honest. There sure is going to be some winners and losers, like with every revolution, of course. It's just that a lot of these people are already specialized in these areas, and they're also taking advantage of the AI. It's not like they're completely asleep at the wheel and they're just like letting their competitors do their job. No, they're actively using these in different fashions. And particularly those that are free cash flow positive and have cash in hand, they're in a very solid position, because it's just a matter of investing in the right people, investing in the right things, and just pushing on, sort of riding the wave. And in this case, riding it at a very good valuation where they can buy back like 20% of their company, which I don't know. But yeah. Moving on, Portillo's. Portillo's is a company that does the very famous Chicago-based uh, sandwiches. Those extremely juicy. Well, I don't want to go into food because I'm getting hungry. Anyway, you can look it up. These guys have been crazily building restaurants for the better part of the last 2 years. They have just met all the goals that they said they would meet. Sure, the capital structure is a bit iffy. They have a lot of debt in hand. And there's also a little bit of a weird share distribution. But overall, it's one of those companies I keep supervising, I keep looking at, and they keep meeting the thresholds that they set them for themselves. So overall, I'd say really interesting company, really interesting valuation as well. And the last company I'm going to talk about before moving on to the second part of this presentation is Smart Organic. Smart Organic is a company based out of Bulgaria. They have about 200 million market cap. They're also traded somewhere else in I think France, if I'm not mistaken. Um, and they just do food, mostly food that's related to protein or protein-rich stuff. Here in Bulgaria, they also do a lot of stuff in Eastern Europe and obviously a little bit of stuff in Western Europe. I think their organization is really, really clean. They're pretty good in terms of one of their cost leaders, but at the same time, the position is very, very solid. And I think tomorrow I'm set to do the final interviews, and I am speaking with the CEO, and you should expect a write-up on this company. Even though probably the mispriced in terms of just pure per share basis price of this list, it is definitely a high quality compounder that you should keep an eye on. I think there's 2 or 3 catalysts that can change a lot in coming up. And again, I will write about these at their CMG. I think I'll either do Monday or Smart Organic, but I have the full set of information for both of them and they'll be coming out quite soon. The reason I haven't been posting a lot of the major write-ups, just so you know, is because of the transition. I've spent a lot of time doing due diligence, but most importantly, I don't want to run over myself because I want to be able to use this information effectively. And it's, the goal is to be able to use the information uh, before, I do major disclosures, because that's a lot of how the repricing happens. There's a lot of price discovery that takes months of research to do. But once the information is inputted into the market, then there's a price correction. And I don't want to miss, the opportunities I generate for myself. Essentially, it's not like I generate any of these. These are incredibly run companies. It's just that I happen to notice. And so, right time, right place. Again, I think third time I've I've said that throughout the presentation. Anyway, engine number one. I think this is the most interesting part. But other than there's a slide of Q&A where some of you mentioned a bunch of companies, and I'm going to give you my 2 cents on that. But other than that, I'll just run through the private end of things with you right now. Um, well, first of all, criteria. A lot of people have asked me about this. I'll just be very brief and very concrete. What we're looking for is we want alignment with the owners. We're buying either large minorities or we're outright buying the entire business. It depends on whether essentially the people are retiring or they're young specialists. But all of them, they need to have alignment with this idea that we're building a permanent home for the businesses. Uh, we're not something like a private equity group or something. We're not an asset manager. We don't buy stuff to sell it. What we want is to create a permanent ecosystem, permanent home that is self-reliant and that essentially generates cash that can be allocated within this permanent home very efficiently. Again, as for the people running it, it's either young people or retiring. In this case, boomers, boomer generation. Um, the younger people we're trying to keep, we're trying to entice them, and we want, you know, highly skilled professionals to join our ranks because, again, I see this as a growing operation. If we get specialists, we can then allocate capital into those sections. I'd say I can do elderly care, oil and gas, and cybersecurity really, really well. I can do some other sectors fairly well, but what I want before I can jump into one of these sectors is having at least one person of reference that in case things go south or in case my focus isn't on the actual production of the goods um, or services, there's someone who's better than me who can run the entire operation uh, immediately. And so that's why the young people. As for the retiring end, well, the retiring people, we buy 100% of the company, or we buy 80% and then have an option to buy the remainder. And those people we have to substitute again with people that are aligned. However, if there's a second in command, if there's more people involved, if there's more key personnel, we want those as well to be aligned. And as for targets, all of these are lower than $1 million in EBITDA. Way lower, to be honest. I think anything ranging from 100K to 1 million is our terrain. There's essentially no bidding wars. We're not really competing against anyone. These people, particularly the retiring people, don't really have a way of passing down the business. The people that should take over their kids or their natural successors, they usually don't want to take over. So it's a fertile ground for a lot of businesses that can essentially run forever. Maybe not grow, but definitely run forever, generating cash flow. And we're just there, waiting until they either come to us or we come to them, and we meet at some hopefully sooner than later date where we can create one of these transactions and we can start reallocating the capital that these businesses generate. And as for the price, everything we do, public or private, is just we have a threshold. It's 15% free cash flow. It usually is an adjusted free cash flow, and we usually predict it within the next 12 months. That's NTM. It roughly equates to less than 6 times EBIT. That's what we're looking for. Sometimes the deal are crazy, like TGS we purchased. I think the yield was something like 34% free cash flow yield. You know, I won't complain if that happens. Be sure I'll be the first one to buy as much as I can when that ever happens. But we do have a threshold in terms of the minimum criteria that we want in one of these businesses, because again, there's no other bidders, there's no competition when it comes to acquiring these, and there's really no rush for us to price them. It's usually a waiting game. So sometimes people, you know, they they price their thing at $1 million just because they think a round number is nice. Our offer is at $721,000, and we actually perform the valuation, and we understand that that is the maximum price that we're able to pay. So until they come down to our price, there's really no deal. Again, a lot of this is just mental framing and you getting anchored at one price because you think it's a round number and it's nice. We don't do that whenever we give out an offer. People think that they're like negotiating with us, but we're extremely clear at the fact that we're going to be very fair with the valuation. But that implies that we are not you know trivializing. It's not like we throw out a random number, but more importantly, there's usually very little wiggle room for actual negotiations. Like we have a cap, that's the cap. You can either take it or leave it, but that's the cap. Very straightforward. We appreciate transparency, and I think it should go both ways. And as per the actual opportunities, here are the things I've been looking at. Uh, so there's essentially four groups of deals running on simultaneously. I'd say some are closer to actually getting completed than others, but definitely I'm looking at all of them. There's a lot of due diligence that goes into this. If you've ever done scuttlebutt for public for listed companies, you can imagine what it's like for private companies. Uh, just take the scuttlebutt and multiply it by 10, and then you probably have the workload of searching for these private deals and actually going through them, in a detailed fashion. When you look at a listed company with, let's say, 500 employees, it's almost impossible for you to go through every contract. But when you're looking at one with 20 employees, I think it's quite relevant for you to look at them very carefully, because a lot of the demo is in detail. Again, to be brief, we're looking at a company starting left to right uh, that essentially does B2B sales to restaurants that have a Michelin star or looking to have one, have the potential, super high end quality. These guys sell their stuff at like a 50+% premium compared to the average sale price. They have about 20% margins on the business, and they have two ways of growing. One is obviously through their showroom, through selling coffee B2C, sort of organically, building a following. But I think where things are headed is, they can look, or they will probably be looking at franchising a lot of these and just setting up, through their academic program, through the training, just get a bunch of people to set up shops and essentially sell B2B, but to themselves. So they have guaranteed buyers, and they still have that showroom, which again creates more following, and again it creates more owners of these shops, and so on and so forth. It is a winning game. Imagine something like a Starbucks. Yeah, Starbucks just with a 55% actually deserved premium because the quality of coffee is just premier. We're talking about like top people, the people who would be judging at contests, or the people who would be winning the contest of testing, of implementing coffee brands, or pricing it, all that good stuff. It's just a bunch of experts that got together and decided that it was their time to shine. Um, and hopefully we'll be taking a minority interest in this company. We're looking at closing a deal hopefully by the end of the year, but you never know with these things. There's always stuff that happens in the middle, but we're very, very close to the deal. Deal number two, or section of deals, should I say, because sometimes it's multiple deals. There's a couple companies that sell musical instruments that have, second and third generation looking to retire really with no substitutes. We're talking to them. A lot of what they do is sort of established, so there's not much growth here, but they do have very recurring revenue. The sale of these musical instruments usually comes with a lot of maintenance. So there's like a lot of part substitution. There's tuning, obviously. There's just the setup, the transportation of these, particularly for people that are going around in touring, doing concerts, all that good stuff. They usually rely on professionals like these, and so again, not a massive growing endeavor, but they have very stable margins and they have very stable revenues as well. Again, because of the recurring revenues, I think we can take those margins, take those cash flows, and redeploy them at much better rates than they're doing right now. The only thing really these guys know how to do is dividends and store cash as like a family saving spot, like a little safe place to store your cash just in case things goes out. Which is fine. I'm not criticizing that. I'm just saying that the capital allocation has a lot of room for improvement, and there is exactly where I think well, we can shine. Deal number three has to do with food distribution, technically food and beverage distribution. There's some logistics stuff out there that we're very interested in. This requires, though, a specialized team, and there's a couple people that I'm very interested in essentially buying out. Again, younger people, we're talking at people below 40 who still have a lot of room to grow. It's just that we can line them in a much larger project. And it's also one of those things that doesn't really scale unless you do M&A. Because if you find the right deals and you have the cash, you can essentially deploy it immediately and get returns immediately. But within certain establishments or certain warehouses, it's you can't really expand. They don't have the best margins, but again, there's really good chances of redeploying opportunistically. It's just that we need the specialized team. We need the young guys to jump over. Otherwise, there won't be any deal here. And last but not least, probably the one that's closest to us and I've talked most about, we are looking at a four deals actually in the elderly care space. I've mentioned this time and time again. I am looking at all of these, by the way, are situated in the north part of Spain. I come from the Basque country, so I'm only acting in the places where I have an edge, and I think I have an edge in knowing the people that are doing this. And in this case, it would be taking over 100% of these businesses that can't really grow. You'll get them at about 80% capacity. Sure, you can fill them up a little bit more, and sure, you have inflation every year adding, but the key thing with them is that you have a very stable base, you have very stable margins, and I could just again redeploy the cash from these way better than the people who currently own it are doing it. So as you can see, there's really two major plays. One is more of like a let's grow together with a young specialized team. And then there's the I'm going to take over and just not change anything in your business, just keep it running, keep it within this home for businesses, and just take advantage of the fact that there's a lot of misallocation in terms of capital. Those are the plays that we're looking at. Recently, I was accused, just so you know, and this is full disclosure, of some sort of confidentiality breach. I really don't understand. I've never given specific data, but this is a search that took me, I think, like 40, 50 seconds to do. If I'm talking about buying businesses in the elderly care space in the Basque country, there's like, I think there's 30 residences that I can potentially buy, out of which I think only 15 to 20 are purchasable for reason XYZ. So, confidentiality, just so you know, and again, I've worked in M&A, has to do with the internal information, with the pricing of it, with the details, with particularly private information when it comes to employees, or trade secrets. But just having someone, hear rumors about the potential transaction has nothing to do with confidentiality. And I just wanted to disclose this because, again, I think it took me like 40 or 50 seconds to write down this list. Sure, I'm using specialized software, whatever, but I'm pretty sure there's a lot of people, especially those that work in like the industry and finance and investment banking, who can literally just click two buttons and select elderly care and a region in Spain, and you'll just have a list. It is exact same list. Anyway, just wanted to get that through because I think it's important. The last part, which I think is there's a really high potential here of really interesting things happening. So as you know, there's a lot of software out there, AI driven software that is completely changing the certain aspects of, in this case, lovable building a web page. But any integration, to be honest, with the chatbots, particularly with Claude, which seems to be the most open ended, uh, is just bonkers. It creates, 100 times what any individual could have done, a few years ago. It's just a massive productivity booster. And on that end, I've seen a couple of very interesting things that are connected, just like Global is connected with Claude, and you can do a lot of stuff by combining both. There's a lot of very interesting stuff happening in the real estate space. In Spain, both of these companies, Causa and Fragua, are companies that I know about. There's a lot of people that are close to me that move in this ecosystem of early stage, software game changers. And I think we should be exploring this space more as, again, as investors than anything else. I don't think we can take over 100% of these companies, but we can definitely put up 10 to 20% of their capital and participate in what essentially looks like early, early winners for this space. Yeah, just wanted to comment on that. And to finish this up, I received two more things from subscribers. They asked me to look at these three companies in at different points in time. Ubu would be the smallest one. I think it's like sub 10 million in market cap. The other two are Canadian, if I'm not mistaken. I don't want to comment a lot in detail. This should be more of like a private conversation, like a one-on-one conversation with the people that asked about it. I just would say that I don't think any of these three qualify to be one of my holdings. Again, know that I'm very concentrated. I only like the super high quality stuff, but I don't see major catalysts or like a price dislocation or massive scalability. I'm sure, like I've been part of freaking Canadian elderly care and Canadian, residents, in this case, dealing with death and all that good stuff. I don't know. I asked some people around just in case, but they really don't meet the criteria to make it, a massive home run, which is obviously what we're looking for. Yeah. And on that end, and to close everything up and out, I'll open it up for Q&A. If you guys have any questions, this is your time. I also wanted to make a last little comment, which is the fact that I'm completely addicted to freaking chess.com for some reason. I I used to play a lot up until like 2021, 2022, something like that. I then didn't touch the game for the longest time, and about a month ago, I got completely addicted to it again. So if you guys want to challenge me to a game and completely obliterate my ego, feel free. That's my little tag, Aliela. Just send over a message or, like a friendship, whatever that thing is called. More than gladly. Let's play some games. That's all I want to say.